What is going on YouTube? It's Sankey and we're back with another one. Alright guys, so as we're at that midweek point in the market, let's take a look at a couple of penny stock plays. Now you guys know how we view our penny stocks as a way to blow off a bit of steam in the market because they can be risky, they can be volatile. Just as long as you guys are clear, we're ready to rock. Now in this video and for the rest of the month, we are bringing back the chart analysis just like we did in December to ensure that you guys as investors, you're elevating your game. So guys, do make sure you stick this one all the way through with me. Now before I get to it, I'm going to need you guys to hit that like button for me. And if you're new, hit that subscribe button, join the journey. Let's waste no time. Let's jump into our first one. Now, as I say, the way to take your portfolios to the next level is to one, invest into new plays, but also invest into the existing plays within your portfolio. And if you've been following our channel plays, they all have a lot more room to run up. That being said, up on screen, we've got Zomedica, that's ticker symbol ZOM. Now, whilst this isn't a new play on the scene, there's a lot more value to be squeezed out of this one. So if you don't know Zomedica, they're a pet services company that produces diagnostic products for dogs and cats. Now we know that the vet service industry has been exploding over the last couple of years and it's accelerating right now due to that stay-at-home guidance where people are taking on more pets. So there's more demand for these type of services. So in comes Zomedica to change the game. Now if we look at the industry growth, the pet diagnostics industry is said to grow around 10% annually. Now as a rule of thumb for you guys, I don't want you investing into any plays where that industry is not growing or is declining. We're looking for at least 10% growth in that industry. Why? Because we're looking to beat the market every single time. Now you guys know as investors we have to think ahead. That's why I'm putting this play on your radar now, because on the 30th of March their product called Trueformer goes to market and it sounds like a good one. What it does is it allows the vets to take samples from the pets and get those results in a matter of minutes versus the old school method of having to take those samples to the lab, which is expensive and takes time. Now I like this play because what they're trying to do is they're trying to fill gaps in the market. Now you guys know I always talk about finding that USP within our plays, and here we have it with Zomedica. Alright guys, so let's take a quick look at the charts. So as you can see on the 3 month, this play has absolutely exploded. But if we zoom into the 1 month, this is where it gets interesting. As I always say, we're looking for those growth candidates that show those signs of consolidating, because we want to position ourselves early into that play before the next catalyst comes along and pushes them up. So as you can see, minimal price action on this Zomedica play over the last couple of weeks, which is good because what it does is it shows that there's investor conviction and confidence behind this play, and all we're waiting for is that catalyst to come along. Now you guys know we have to do a rundown of the potential upcoming catalysts to push this stock price up. The first is they've gone ahead and partnered with a company called Miller to distribute this Trueformer product in mid-eastern US. Now if you read the finer details, this is not an exclusive distribution agreement, so we could potentially see some more agreements come along, and that could act as a catalyst to push that stock price up, and this could come even before the 30th of March. Guys, the second is that this is not their only product they have. You guys know I say when you're investing into these drug manufacturers, always look to see if they have more than one product, because their second, their third product could act as a catalyst to push the stock price up if they make good developments on them. So here we have it with our play. They have 2 additional products in development. And the next is any actual or forecast sales of their Trueformer product. And if they're good, this could act as a good catalyst to send that stock price on its way. Guys, let's talk strike price on our Zomedica play. If you can catch this one under $1, do consider loading up if you're new to this play or adding to your existing position. Now you guys know a penny stock video would not be complete without touching on some energy penny stock plays, because round here we hit a lot of success with them. That being said, up on screen we have Ocean Power, that's ticker symbol OPTT. If you're new to this play, they turn ocean waves into renewable energy using their technologies. Now news has dropped today that they've gone ahead and acquired a company called 3D Dent. This is an engineering company that adds to Ocean Power's capabilities to look after their clients. Now guys, let's take a look at the charts. So as you can see at the time of recording, that share price has increased nicely, up 10%. This is the power that acquisitions have on a company's stock price. And you guys always ask me, how do I go ahead and pick my plays? One of the criteria that I look for is how acquisitive they are. That is how often they go out, acquire new businesses to add to their company. Now, because they bring in resources, technology, customers, products, new geographies, and more. So guys, this is a good thing to see. So I want you guys to keep your eyes peeled on this play. And currently standing at 150 million in market cap, there's a lot more room for this play to be priced up, especially if they're going to go out there and acquire new businesses. Guys, let's talk strike price on Ocean Power. I've set that at $4.50. So if you can catch them at $4.50, come and join us on this play. Now you guys know we can't talk acquisitions without touching on the acquisition specialists themselves. That's our play Orbital Energy Group, ticker symbol OEG. Now we are still holding the 100 shares strong in this one, currently standing over 400% return. If we look at the 1 month chart, it wasn't long ago that they were touching on that $10 mark. Now they've since had a pullback, come back down, but if we look at the 1 day chart, guys, they're making their way back up to that $10 mark. So I want to make sure they're on your radar. Let me remind you why we like this Orbital Energy play. They're an acquisition company. They have a power division, a gas division, a solar division, and they've newly added a drilling division. And it's not going to be long before we see more acquisitions to increase their portfolio offering. Now we know that OEG has been busy winning partnerships and deals, and that's reflected in their backlog in their last quarterly report of $50 million. Now guys, that's probably a lot higher now, and they're also sitting on $35 million in cash from their stock offering, which they can use to go out and make those acquisitions. So guys, as I say, this stock is approaching $10. Make sure you got them on your radar. My strike price for our OEG play is $8.50. Catch them under $8.50. Consider joining us for the run up on this one. So it's our session on chart analysis. I'm going to cover buying the dip using the Fibonacci tool. So I'm going to pull up one of our MVP plays, that's American Battery. Now you guys know how I say we're going to crush this play this year. That is sell out at the top and buy at the bottom. So as you can see up on screen, optimal time to sell out was above $4. And as expected, that's come back down to under $3. You can buy back then, which is what I did, and it's come back up. And it's hitting that $4 mark again. Now guys, we can use the Fibonacci tool to help us do that. Let me show you on screen. So up on screen we have the American Battery share price graph. And guys, remember now we are trying to buy this dip as low as possible before the stock then rebounds. And that's how we're going to make some good returns on this. Now we can use this Fibonacci tool. And what it's going to do is going to produce a series of lines. And those lines are points at which that stock is likely to rebound. So let me go and put that on screen now. To use the tool, you'll start at the bottom of the run up and finish at the top. So I'm going to need you guys to focus with me now. So these are the Fibonacci lines that I mentioned. And remember, these are the points at which the stock is likely to rebound off its dip. Now, if I walk you through, when we started off, that stock price has fallen through the first couple of lines until it rebounds off this line here. But given the magnitude of the run-up of American Battery's stock price and how far in advance that they're going to generate revenues, I knew that there was going to be more of a dip. So that wasn't a good point to buy in. Now I'm going to highlight to you guys this line here in bold that says 61.80%. Now guys, this line is called the golden average, and this is the line that is most likely that stock price is going to rebound and continue its upwards momentum. And here you have it. Exactly, that stock hit that golden average line and it's then rebounded up and it's onwards and upwards from there. So this is a very useful tool for you guys to go ahead and use for those stocks that are in dip mode to try and time the bottom of the dip, and that's going to help you guys maximize your returns when that stock does rebound. Alright guys, if you've been rocking with the channel, you know what time it is. Next question comes from Chris. He says, is CCIV a long-term hold after the merger? How long would you hold it for? So if you've been locked into the channel, this one will be no stranger to you, and we hope you'd have this in your portfolio as well. So this is Churchill Capital. This is the SPAC that's merging with Lucid Motors. That's the electric vehicle manufacturer. So as you can see, we're still holding on to those 100 shares strong, currently standing 125% return in this play. So yes, we've had some volatility today, down 8%, but on the week chart, we're up 40%. Now guys, that's to be expected. And that brings me to my first point about talking about holding these stocks through volatility. So this is especially for my new investors locked into the channel. You are going to get volatility in the stock market, but sometimes you need to hang back, let those catalysts come in and take effect. So in terms of CCIV and my plan going forward, I'm going to hold this one right through the merger and afterwards. I like this play. There's a lot of investor excitement around them, but also they're targeting an interesting niche within the EV industry, that luxury vehicle segment. So I do think they could do very well. Now, going forward, I do expect volatility with this play as we've seen so far, but that's not going to put me off, because I do think if they're able to gain momentum, get a lot of orders for their vehicles, you could see a lot more gains to be had from CCIV. Now, as long as the business continues to perform and show momentum, I'm very likely to hold this one into next year. Along the way, if there are sharp increases in that stock price, and I don't think they're sustainable, what I might do is I might trim some profit off the top, but I'm definitely looking to keep a lot of capital into CCIV and let that work. So one thing I want to say about CCIV and other quality EV plays is they are just getting started. This is the beginning of the EV revolution that we're seeing. You're going to see a lot more growth over the next couple of years. So as an investor, you want to be well positioned to take full advantage of this, whether it's the vehicles, the charging points, or the batteries. As always, thanks for tuning in, guys. Do hit that like button for me. It really helps the channel out. And if you're new, hit that subscribe button. Join the family. Also, check out the link down below to the Patreon, where you'll get access to the Discord, and you can join our team of investors over there, where I spend a large portion of the day on there talking to the community and answering questions. So, guys, as I always say, stock market is rapidly moving. Check into the channel every single day so you never miss a beat. And I'll catch you guys in the next one.